important topic today to cover. This is an important one. Remember it. And this is why you never, ever, ever, ever put real estate in an S Corp at all. At all. Don't ever do it. Before I go any further, if you're getting value out of my content, I want you to like this video, subscribe to my channel, and share it with your friends, because hopefully none of them are doing this. Let me start by saying this. If there is a CPA or an attorney that is telling you to do this, you need to run the other way. There is no good reason to do this. None. Absolutely not. Let's start with what the purpose of an S Corp is. What is the purpose of an S Corp? An S Corp saves on FICA taxes, right? That's your whole purpose. That is the whole purpose of an S Corp, is that let's say you're doing accounting work, and the average, and you make $300,000 a year in profit, but you could say, okay, the average accountant in my area, based on experience and all that, makes $100,000. And so you take your $100,000 as a salary, you pay FICA taxes on that, which is your 6.2% of your Social Security, 6.2% from the employer side of the Social Security, and then you repeat that with the 1.45% Medicare tax. So you save, because that other $200,000, you're not paying any FICA tax on. You're just paying income tax on it. So this is why you set up an S Corp. It does not work for rental real estate. And I'm going to explain why. So let's start. And yes, I have a sock here to erase because I couldn't find the eraser. But anyway, let's start with number one. And this is passive income to active income. Now, what do I mean by this? Real estate is a passive activity. It has, it's governed by passive activity loss rules. I'm not going to go into detail on those, but when your income from real estate, from rentals, it flows into your 1040, it just shows up on Schedule E. And if you have a loss, depending on if you're a real estate professional, whatever, we're not going to go into all that detail, but generally you will not be able to take a passive loss unless you have passive income to offset it, because of the passive activity loss rules. And so that is very clear. And again, there are some exceptions, real estate professional, and if your income is low enough, you can take, I think, $25,000 of passive losses against your income. But anyway, this is not, the point is, you get passive income. When I turn this into an S Corp, and I shouldn't use the word active, but you're taking passive income not subject to FICA. And the FICA is the Social Security, Medicare tax, let's write it over here, income subject to FICA taxes. So what I'm doing now is I'm taking my passive income, that I got from real estate, and I put it in this S Corp, and now that income, I'm going to get hit with FICA taxes, because I have to take a salary from the S Corp. You cannot have an S Corp and not take a salary. You can't. You have to take a salary. You will have to pay some FICA taxes on that. This defeats the purpose. You don't want to take income that normally doesn't have FICA and potentially expose some of that income to FICA taxes. This is one reason why you do not do this. Okay, so the second reason, this is one that's probably not talked about a whole lot. Step up. I can't write today. Step up in basis. at death. Okay, this is a big one right here. Step up basis and death. I'm sorry, yeah, there's little markings and everything. When you do this, when you get, okay, normally when you have a house, we'll keep it simple with a personal residence. You have a house, and let's say you bought it for $50,000 many moons ago, and you get older, you live in the house, and then you pass away, and it's worth $500,000. Normally, you would think, okay, what's the basis? Your basis is your cost that you paid for the house, which is $50,000. Well, when you die, your basis steps up to the fair market value at death. So in that case, it would be $500,000. So your heirs could turn around and sell that property, and they wouldn't pay any tax on it. They would have no capital gain. Now I know there's homeowners, personal residence exclusions and stuff, but we're just keeping it simple. We're saying, okay, your basis is now $500,000. Your heirs could sell it and not pay any gains. They would not pick up any gains. But S corps don't do that. S corps have no step up. This means you put that property in there, and let's say it's a rental property and your basis is $50,000 and it goes up to $500,000, you're still at 50. That's a big mistake. And on a rental, that's a lot of tax that you're paying because of that mistake. You cannot do this. Do not put stuff in S corps with that reason in mind. So there's one reason. Number 3, I'm sorry, I skipped, I can't count today. So when you transfer your house, your property, we'll say your rental, so you have your rental, into the S corp, taxable events. Okay, I write down. So when I say you don't put real estate, in this case, you have a rental property and you put it in this S corp. It is a taxable event unless you own more than 80%. And that is from section 351 of the Internal Revenue Code, I believe. So if you do this, you're good. You're good if you're owing over 80%. But you're not good because now you put that in here, you don't get the step up in basis. All of your rental income, some of that is going to be hit with FICA taxes. That's more taxes than you need to pay. And if you're less than 80%, so you own it with like a buddy or whatever, well, guess what? You're going to be paying taxes on that. It is treated as if I sold my property to the corporation. Don't want to do that. Please do not do that. Now, the other thing too is, what happens if you have a mortgage? Well, if the S corporation is picking that up, that also can trigger a taxable event. Why? Because a mortgage is a liability on your books, and if I'm transferring it to a corporation where I don't necessarily own all of it, well, guess what? It's a taxable event too, because it's the same thing as if the S corporation gave me some money to relieve that liability off my books. So you want to be careful with all of this. If your mortgage is greater than the basis of your house, which you're thinking, well, how can that be? Well, you depreciate that. You depreciate that house. So over time, the basis goes down. Like if you have a $100,000 house and, let's say you've depreciated over 27 and a half years, the basis will eventually go to zero, but you may still have a mortgage on it because the home, in the eyes of the mortgage lender, still has value. They don't look at it from like depreciation standpoint. That house could be worth $500,000 and they'll give you another mortgage on it. So again, when you do this kind of stuff, it could trigger a taxable event. And so you want to be careful about that. And the other way is when you transfer it out. So when you transfer that, if you transfer the rental out of the S Corp, that also triggers a taxable event because that gain will flow to you. It will flow to you from the S Corp. It just, on a K1, S Corps are pass-through entities. What does that mean? That means all of their income and loss will be proportionally distributed to you in the form of like any gains and all that get flowed over to your personal return. So those are some reasons why you do not want to do rentals inside of an S Corp. Now, you're probably like, well, what do I do then? What do I do? All you're telling me is no. You're just being a negative Nancy. Okay, well, I'm gonna tell you what you do. You just leave them as an LLC, and it flows to your 1040 Schedule E. This is what you do. And I know it's crappy handwriting here, but you want your LLC to flow to your 1040. Simple as that. Put your property in an LLC, and then if you have a service business or you're doing something to generate active income and you want to save on FICA taxes, and it makes sense for you to do this, and I say that because you need to run the numbers, then put that piece in an S Corp. Just have two LLCs, have this LLC that owns the property, have it run through your 1040. The other LLC can run through the it can be taxed as an S Corp, and it has your service business in there. That's what you do. Now, before I get off of here, there's one thing I do want to say, and that is if you're a house flipper, all of your income is active. That may be one way to justify having some properties in an S Corp if you are flipping them. But rental-wise, no way. So I hope you got a lot of value out of this video. If you have any questions, please feel free to contact me. Drop the questions in the comments. I hope you got a lot of value out of this video, and be sure to share it with your friends so that they don't make